Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Talk about the big story now. If you look at the mutual fund data that came in for the month of July, the MF inflows are actually down by 69% month on month, and this is the second consecutive month of a sharp decline that we've seen in MF flows. So you track this data very closely. Generally this kind of data is volatile, but now second month that we're seeing a decline.
Well, actually not just second month, Sonia, it's the last several months. I mean, in a very steady fashion, we've come down from the highs of around 20,000 crore rupees a month to now very paltry numbers. We're talking, less than 10,000 crores coming into the market. People are going to dissect this data very, very differently. Each one cuts it the way they want to. Some people will include ETF flows. Some people will not include balanced. I keep it really simple. You should look at pure equity flows. We must look at the ELSS flows, and that continues to be a silver lining because SIP flows are sticky. There is no taking away from that. Even month on month, SIP flows have increased 8.5%. Now, the question is ETFs, equity ETFs. Should you include them, not include them? That's the lumpy number, which is why you've seen a 70% odd decline if you see month on month. Last month, there was a big chunky inflow thanks to the Bharat 22 ETF that came in that pulled up the headline number. This month, there are outflows, ETF outflows to the extent of almost 4,000 crores. That puts a question mark for me anyway on the kind of money we're getting in these PSU ETFs. So that money is moved out, which is why your headline number is looking so paltry. Even if I look at pure equity flows, well, we are at 8,500. We were about 8,800 in the month of June. I mean, Anuj, Sonia, whichever way you cut it, the way I look at it, people can choose to dissect this data and try and pull out strings. The fact is, flows are tapering off. Yeah. My question is that the market sentiment improved over July. Yes. Typically, these things turn when the market sentiment turns. Yes. So this is data in hindsight. Yes. How much we should be worried about it is a different question. But numbers are sobering. There's no taking away.
Yeah, that's a bit of a lagging indicator for sure. ETF also sometimes, are like, stocks. You're getting a discount. You buy, for example, there's a junior ETF. All of a sudden, there's a big decline in the market. You buy it. And then,
and there's redemption.
In a matter of 2 weeks or so, for example, the Nifty Junior ETF went up 10%. So there's temptation to withdraw it as well. So obviously, also on this equities, a lot of people would have withdrawn, equity inflows, but would have kept their SIPs intact, because the lower NAVs would mean that your SIPs would get more units. But because you're concerned about the market, you may want to withdraw, your last 3 or 4 years, if you've been consistently, putting money and your NAV is still up about 50-60%, you would want to just withdraw that money, lock it in, and at the same time continue your SIP. I think that's my reading. But let's ask A. Balasubramanian, the chairman of AMFI and CEO of Aditya Birla Sun Life AMC. Bala, good morning. You would have heard Surabhi's analysis of the numbers. I wanted your take on, the fund numbers. Is this something to get worried about or not quite?
Yeah, I think I just saw the analysis detail that you had just done. Clearly, the industry is segregating the numbers into 3 parts. One, the money that flows into the actively managed fund, which includes balance fund. And second is the arbitrage fund. And third is the ETF flows. The number what you talked about, 8,500 crores, that of course inclusive of arbitrage fund, but the flow that comes into the actively managed equity funds. The way one has to look at the last few years have been, of course, good year, and the last 3 months have been relatively weaker market sentiment, as well as we have seen the flows getting a bit reduced. But there's one thing which has remained constant, of course, is the flows into the mutual funds have been incrementally positive. And second is SIP registrations, of course, has been growing continuously. And third is the new investors who comes into the mutual funds, which again reflects on the folios. I think if you have seen the number of folios added for the month of July also continues to remain robust. But having said that, at any point of time, we have seen historically, whenever the market either goes into flat or the sentiment is relatively weaker, we do see the flows into the mutual funds getting tampered off. But unlike the past, where we see a significant change in the trend, while there is a slowdown, but the incremental flows in equity would continue to remain somewhere in the range of 9 to 10,000 crores kind of number. I think as we see the sentiment improving, maybe we could see only this run rate per month, which generally we look at for the industry as a whole, could only get better, given the fact a lot of messaging that is going in, both at the industry level as well as the individual players level, that equity investing is for long term, not for 1 month, 3 months, 6 months, or 1 year, 3 years. And therefore, that messaging also ultimately will increase the the holding period for the investors. That's where we see it.
So, Bala, I take your point. You're saying that in the medium term, I think you said 9,000 to 10,000 crores a month is a sustainable number. That's half of where we were at the peak. I just want to understand one thing. The inflows coming into balance funds have dwindled so sharply in the last 6 months since this dividend tax came into being. It's down to a triple-digit number. I mean, we're looking at some 900 odd crores. This used to be a massive number in balance flows. Where has that money gone? I mean, that's clearly not getting plowed back into the pure equity side of the market. How should we account for it?
Yeah, and again, it's a good observation. I think the peak number that we saw, I think we should, one, look at it from the post-demonetization. There is a huge shift towards alternate asset class. And mutual fund was one of the beneficiaries around that point of time. And second is, a lot of people are actually migrating from fixed deposits into the balance fund as a category on expectation of dividend, etc. So that segment obviously is it will get reduced post the introduction of dividend distribution tax. At the same time, as I mentioned that while we could see a marginal dip in actually the balance fund, we have seen phenomenal growth in the last few years, especially the balance fund as a category. Therefore, it's not a worrying factor if there is a bit of slowdown in the flows in the balance fund. I think one has to look at it, the pure equity, how the flow is coming. And the SIPs are generally getting registered mostly in the actively managed equity funds. And which is, I think, is the sustainable the trend for the industry. That as your SIP book size keeps rising for the industry as a whole, I think clearly you will see the sustainable flows staying for long actually.
So what percentage of the net inflows into equity mutual funds will come from SIPs, say, over the next couple of months? Because we were speaking to Sandeep Sikka yesterday, and he did indicate that now 1/3 of the money that goes into mutual funds comes in through the SIP route. This month as well, we've seen about an 8.5% rise on a month-on-month basis in the SIP flows. What is your prognosis on how it will shape up from here?
Yeah, I think the SIP flows as a percentage of equity net flows, that proportion now keeps rising. Today, the whole industry would be having about 23% of the assets under management, anywhere between 23 to 25% of the assets under management, close to about 9 lakh crore, coming from SIP flows, which is again a good, healthy trend. And second is incremental flow that we are saying, as it is the slowdown that we are witnessing, is largely coming on the back of lump sum flows getting reduced and mostly getting shifted towards SIP. I would assume instead of 1/3, it could even become half of the flows would come through the SIPs. The current run rate on SIPs is close to about 7,000 odd crores as of now. And this number, I would assume, will only keep rising. By the end of the year, I would not be surprised if the number goes close to about 9 to 10,000 crores.